Welcome to the 39th installment in Trading Strategy Guide's Trading Education Series. Today we're going to look at the MACD indicator. Stick around. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. In today's video, we're going to discuss the MACD indicator. As with the ATR, since this video series is about practical instruction, I'm not going to fill it up with historical and theoretical information. I know some of you are like me and you want to know every detail you can about something, but I also know that there are a lot of you who don't. So if you want more details about the history of the MACD, I suggest you Google the MACD indicator and you'll find out everything you want to know. I will share a bit about how the MACD is calculated though, because it's necessary for you to understand what the indicator is telling you. For starters, for you name geeks out there, MACD stands for Moving Average Convergence Divergence. Now that I got that out of the way, nobody calls it that. Everyone just says MACD. The MACD is a momentum indicator that consists by default of subtracting the 26-period exponential moving average on the closing price from the 12-period closing price EMA. The resulting line is called the MACD line. Then a 9-day EMA of the MACD line is plotted as a signal line. Now, a signal line is intended to simply provide a historical perspective of the value of an indicator. If you've watched any of my trade picks videos, you've seen me use a moving average on a volume indicator so that I can have a view of where the current volume is with respect to the past. We can't know where we are unless we know where we've been, right? So the result of all that calculation tells us a couple of things. Number one, if the price is in an uptrend, with the 12 EMA below the 26 EMA, the MACD line will be going up and hence will be above the signal line. And number two, if the price is in a downtrend with the 12 EMA above the 26 EMA, the MACD line will be going down and hence will be below the signal line. So the position of the MACD line with respect to the signal line can give us a great buy or sell trigger in conjunction with other price action info. And the higher or lower the MACD line goes with respect to the zero or baseline, the more momentum is moving into the market. Now when I use the MACD, I prefer to use a histogram with the indicator. The histogram makes the momentum much more clear by showing the relationship between the MACD line and the signal line. The length of the histogram line shows how much momentum is in the market, and when the MACD line crosses above or below the signal line, this histogram will move through zero and make it much easier to see the crossover. You can see an example of a crossover right here when the MACD line moves above the signal line right here, and the histogram moves above the baseline and turns from red to blue. Now you can see the opposite right here where the MACD line moves below the signal line, and you can see the histogram moves below the baseline and goes from blue back to red. Yes, you can see the exact same information in the MACD line crossing the signal line without a histogram, but my old eyes find it far easier to see the histogram crossover. You can pick whichever one you like. While we're looking this over, I do want to point out that you see this huge momentum move right here corresponds to this big move in the MACD, and of course it also corresponds to the MACD histogram moving up. Then make note that the momentum kind of dropped off and this started going kind of sideways right here, and during the course of that you can see the MACD dropped off down towards zero. So the MACD can tell you a lot about a market. Now before I wrap up this video, I want to show you what I think is one of the most valuable uses of the MACD indicator, and that is for finding potential trend reversals using divergences. I'm pretty sure I discussed divergence in prior videos in this series, but just so you don't have to go back and find all that info, I'm going to explain it again briefly right here. A divergence is a situation where an indicator is showing a trend in a different direction than the price action. In other words, the indicator may be showing an uptrend and the price action is showing a downtrend. Now, just to make sure that you remember the definition of a trend, an uptrend is where the price action or an indicator is making higher highs and higher lows. And of course, a downtrend is the opposite. The price or indicator is making lower highs and lower lows. So as I mentioned, a divergence is where the indicator doesn't agree with the price action. When that happens, it can be a great indication that the price action is about to reverse. Here's an example of the 15-minute Australian dollar US dollar Forex pair from last week. You can see that the price action is making lower lows right here, while the MACD indicator is making higher lows right here. And as you can see, price turned to the upside at that point. Now here's another example on a daily crude oil chart. You can see price action is making lower lows right here, while the MACD indicator is making higher lows right here. And of course, price turned to the upside. Now remember, no signal or strategy is 100% accurate, so this will not work every single time. Please don't expect it to. But I think that you'll find that it does work often enough that you can make bank on this strategy as long as you shut down the losers early and always manage your risk. Take some time to study the MACD indicator. See how it reacts with the price action on a bunch of different charts and a bunch of different time frames. Spend some time finding divergences and seeing what the result of those divergences is. See if it works better on some markets and time frames than it does on others. Make sure you keep notes on all this information so that you can refer back to it. The more you look at these charts and divergences, the easier they will be for you to find them. And that's it for today's video. Next week, we're going to be looking at the RSI indicator. Come back Friday for my strategy of the week and next Monday for my trade picks. And don't miss the next installment of the Trading Education Series next Wednesday when we'll talk about the RSI indicator. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. Again, I say, please be patient with me. I will catch up on answering all your questions. If this video helped you, smash the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Okay, guys, I hope 2021 is going well for everyone. Have a great Wednesday, and I will see you on Friday.